Hey traders, Tracy here, and in today's video I actually want to talk about scaling into a position on the way down, okay? Dollar cost averaging. Some people, I've heard the term used, is called pyramiding as well. Most of the time you're going to get a definition of pyramiding as adding to a winning position. Now, to start, just a little disclaimer, I am not a financial advisor. I am not advising you on how to trade or what to trade. This is just for educational purposes only, and really to go through the math on how to do this. Now, as much as I agree wholeheartedly that adding to a winning position is very good. It's a great position, and I'll probably do a video on how to do that later. But I do think that there's a time and a place where you can start to build positions and add to positions on the way down. Now, I do not consider this adding to a losing position because I'm planning on doing it. It's not a losing position because I know exactly where I'm getting in and where my risk is. Once I'm in the position completely, I know exactly where my 1R or my risk should be. Okay, so what I technically do, or what I would do, is I set my level. So let's just use this run right here as an example. This isn't where I would be buying in. This is just an example on how to do the math. So let's say that I set up my levels, and I'm going to set up a 4-tier pyramid for myself. So I'm going to, let's say that I want to get in at this level right here. I want to get in, let's say right here, and I want to get in right here, and let's just say one more level right there. So these are the 4 areas that I want to get in on AMD. Now, I have an actual system for selecting that, which involves figuring out what the pullbacks, the average pullback of the stock is, and then determining my levels from there. But normally you would be buying off of support levels on dips or pullbacks. So the idea around this is that my first level, and I'm going to stipulate this very clearly, I know where each of these levels and how much I'm getting in before I enter any particular trade. Okay, this is not I get in here and it starts to lose, so I'm just going to add more, and then it's going to lose, I'm going to add more again, and then it's going to lose, and I'm going to add more. That's not what I'm doing here. I'm actually planning out a trade. Now, the reason that I do this, and the reason that I like doing this, is I don't know where the bottom is. I have no clue, but I also want to be in the trade, and a lot of my pyramids that I set up, I get filled on maybe the first, maybe the second leg, and I don't get the third or the fourth leg. But then what ends up happening is it runs bullish. I'm winning in the trade, and then when it starts to make all-time highs, I'll set up another pyramid to get in, and I'll just complete the position that way. So I'm kind of setting up an original pyramid where I'm building on the position as it's going down, but once it turns around and it starts to be in the positive, I'm actually adding to a winning position. So at this point, we're not into any shares, and this is kind of what I do. So at the first leg, I would be getting 5%. Okay, so I'd be looking at 5%. So let's just use round numbers, and let's say 5 shares out of 100. So 5 shares out of 100. Okay, that would be my first leg. The second leg, and let me just change that to the right so you can see it. The second leg, I would be getting 10%, or 10 shares out of 100. Okay. And the third leg, I would be getting 20%, or 20 shares out of 100. And then my last leg, let me just move that to the right. And my last leg, I would get 65%, or 65 shares out of 100. Okay. Now, you don't have to use these numbers. This is just what I do, and I do it consistently. And I either am building a 4-leg pyramid or a 3-leg pyramid. Now, what I do is you take the first leg and you calculate 5 times 102.99, because that's the price. So this will be 5 times 102.99, which equals that equals $514.95, okay, which equals 514.95. That's your first leg, and that's what it would cost you to buy those 5 shares. The second leg, it's going to be 10 shares at $95.84, which equals $958.40, right? $958.40. The third leg is going to be 20 shares at $86.16, which equals $86.16 times 20 is $1,723.20. That's how much that leg costs. And the fourth position costs, that's 65 times $80.82. So that's 65 times 80.82, which equals $5,253.30. That's what it cost me to get into the entire position. Now, if I add up all of the costs for this trade, so that's $514.95 plus $958.40 plus 1723.20 plus 5253.30. That means that I've spent a total of $8,449.85 on the trade. I bought 100 shares. If I divide by 100, that gives me a cost average of $84.49 or 50 cents. So $84.50 is my dollar cost average. So let's plot a line on the chart. There it is. So double click on this. I'm going to put the coordinates in, $84.50. Okay. I'm going to make that black so we can see it. I'm going to make it super big. There we go. And this is my dollar cost average of the position. Okay, I'm going to make that black as well. And I am going to move that to the bottom. So this is the final price once I get filled on this particular leg. Now, what I will do is I then place my long position on here and I go to my 100 shares based on my risk. So you'd go into the risk profile, you'd find out whatever your risk might be. So if it's, let's say it's $3,000 that you're willing to risk on the share or on the trade, then you set your stop. So then my stop would be for 100 shares would be down there. So this is where my stop would be with a $3,000 risk. That's where my stop would be. So if I got filled on all 4 of these positions and then the price continued to go lower and stop me out right here, I would lose $3,000 based on my risk. So what I do is I set my stop. Let's say that I want my stop to be right there, and I then set my position tool and I see, okay, well, I can actually get 230 shares. So I would actually buy 5% of that, 10% of that, 20%, and 65% of that 230 shares. And it works out the same way. So that's basically how I calculate the shares. So you take each position, figure out how much it costs you for each position, add the entire position up, divide by the number of shares, and that gives you your dollar cost average. Figure out where your stop needs to be, and then position yourself accordingly. So at any given time, if this fails, if it breaks this level and continues lower and stops me out, I'm only risking the 1R like I would normally. So I'm not concerned. The reason that I like doing this, like I said, is if it bounces off of here, because I have no idea where the pullbacks are going to happen and when the position is actually going to bounce. I can still be in the small position and take advantage of that, and then I can start scaling into the position later on. Let me know if you have any comments, throw them down below. I'd love to hear how you possibly enter into some of your pullback trades. This is just one option. It is calculated, the risk is controlled, and I know exactly what I'm doing before I do it. And that is the difference between adding to a losing position. I do not add to losing positions. This is planned. So just remember that, keep that in mind, do your calculations ahead of time, and happy trading, everyone. Cheers. If you found value in this video, please hit that subscribe button, hit that like button, and don't forget to hit the notification bell. Until next time.